Hi there, good morning. Um, so I'm making these videos for us on our Access program, and these videos will cover the Introduction to Finance module, and there's going to be an exam at the end of this module. But if you go through all the videos, um, you'll be fine. So we're going to go through. Let's just see what we need to cover in this module. Let's look at the scheme, the learning objectives, and sort of see where we're going. So you can see here that you have, you can see what the learning outcomes are, and you can see what the assessment criteria is as well. And in this first class, I'm going to be covering the first learning outcome, which is understanding the purpose of accounting and the difference between capital and revenue income and expenditures. I might maybe use 2 videos to cover this, but probably maybe the one. And you can see the learning outcomes are explaining the purpose of accounting and differentiating between capital and revenue income and expenditure. Now here's the thing. In the exam, you're just going to have to write about this. So I'll probably say something like, state 5 purposes of accounting and, state the differences between capital and revenue, income and expenditure, and give examples. So that's how you will see this, come out in an exam. Okay, let's go into this. So what do we have here? Let's start. So our objectives, if you like, are to look at the, where are we? To look here at the purposes of accounting. So we're going to state what the capital income and capital expenditures are, and to also introduce the accounting equation. Again, whoops, sorry, where did that go? One second, sorry. Forgive me. Okay. Okay, so I'm back here. So to also look at the accounting equation. Okay, let's go. So yeah, well, let's sort of go straight into. I'm using our lecture notes, but let's go straight into why we keep accounting records, or the purposes of accounting. And I guess one of the key purposes of accounting is to record transactions that have happened in a business or in an organization. So if you're not keeping these transactions, well, it's very difficult to know who owes you money and who you owe money, because a lot of trade today is done on credit. So you need to be able to say that really this allows for the up-to-date and accurate, smooth running of the business. These are some other very good reasons that if you're not, like we've said already, if you don't keep these records, and if you don't know who you owe and who owes you, you might find it very difficult to chase people to get your money. Another key issue here is this one here, number 2. That's to do with Her Majesty's Revenue and Customs. And this is really about paying tax. In this country, in England, it is important to pay the right amount of tax. There are consequences for paying the wrong amount of tax. And the government don't sort of say, well, you kept bad accounting records, you pay the wrong amount of tax, you're okay. No, you will still pay a fine if you don't keep good records. So a very key reason is to pay the amount of tax. Now, another really important reason is this issue here, financial performance. I mean, performance really means how well has a business done. How well has a business done? I guess it's like all things. How well has someone done? We say, how have you performed? And when we talk about financial performance, we're really looking at profit. We're saying, this is our key indicator of financial performance, profit. And if the business isn't doing very well, or if it is doing very well, the only way, or the best indicators for knowing that are looking at the records of actually how the business is done, so we can sit down and actually look. Like all things, even at school, you actually have a piece of paper or a document showing your grades, and in effect, accounting serves that role. Accounting also serves to monitor activity, so you're able to. We've sort of talked about this as well. Sort of when we talk about monitor, we've just finished a module on budgeting. So accounting is very much about control. Controlling costs, and managing costs. Controlling costs, all the words, all the lovely words we talked about. Control, coordination, communication. So you can speak between different departments, because you have figures to tell us what's really going on. You can manage the costs. And these are all very key points. Decision making. So you can see that accounting records are kept for financial reasons, to know what performance is, and also when I say financial reasons, to be able to give external stakeholders and tell them how your business is done, and also to look internally and make decisions. Exactly. We also want to be able to make sure we can meet our day-to-day expenses. So if you don't keep a record, if you're not watching what's going on in your bank account, or keeping a record of how much money you actually have, you might have a situation where you won't have enough money to pay someone you owe, either a bank or someone you bought goods from on credit. So we've talked about control. We've talked about management of the business, whether you're hiring more people, you need to pay wages, order new stock, pay bills, things like this. These are all the key points. And we've also talked about financial performance, whether or not you're making a profit or a loss. And we will look in the very next video at the meaning of these words, of what gross profit is and what net profit is. But the key point is that keeping financial records helps us to determine what the profit of the business is. And if we know what the profit is, we know if it's worthwhile embarking on the actual business itself. Okay, another key point is that you'll see later on that we will look at other financial statements. Typically, when I say other financial statements, I mean what's referred to as the balance sheet. And the balance sheet tells us the value of a business. If you think about it, when you start a business, you might buy some assets, or you might buy things that the business needs, machines, a car and things like that. And you will owe, you might have taken out a bank loan. When we look at the accounting equation, we'll see that relationship. But ultimately, we want to know what the value of the business is. You might want to sell the business, after a year or two. So the only way we'll know about this is if we have kept good accounting records. Okay, right. So what we're going to do very quickly, this card does. What I want to do very quickly is just summarize, if you like, what these issues are that we've been sort of discussing, if you like, what the key issues are when it comes to control. So number one, we talked, it doesn't matter in what order that we talk about that. We want to know what our the right amount of tax that we have to pay. We want to be able to control our expenses. We want to be able to monitor our expenses. We want to know what the financial performance is of the business. We want to know what the value of the business is. In terms of control, we want to be able to control expenditure. We want to know if we need to hire new staff. We need to know if we're spending too much money on inventory. So we want to know what the actual transactions are. So this is come in no particular order. My point is that in an exam, if you're asked what are the purposes of accounting, here we are, all these, and we can actually you should be able to write these down and expand on them. Okay, great stuff. So I will see you in the next video.